Hello everyone. So, continuing our previous topic, issue of debentures other than cash. So, other than cash, when I speak, that means no cash or check is received. Till now, we have understood two entries we have gone through. First is the issue of debentures to the promoters by passing entry incorporation expenses account debited to debentures account, and the second one when business is purchased or assets is purchased, है ना, and debentures are issued to vendors. In that case, we passed few entries like sundry assets account debited to vendors account. And when you purchase a business, so when you purchase a business, that means you are taking the assets and the liabilities. So in that case, we have gone through a new concept about purchase consideration. So this is the agreed amount which is required to be paid by one party to another business enterprise. Okay, now let's see the accounting treatment of difference between purchase consideration net assets acquired. Net assets means it's nothing but the assets, value of assets minus value of liabilities. All right, so the difference between assets and liabilities is called net assets. So what is the how to treat as per the accounting rules if there is a difference between purchase consideration and net assets? As we have gone through the three cases where purchase consideration can be equal to the net assets, it can be more than net assets, or it can be less than net assets. When I speak about net assets, I'm basically referring to assets minus liabilities. So if purchase consideration is more than net assets acquired, so you have to open a new account which is called goodwill account. Okay, if net assets are more than purchase consideration, so a new account will be opened, that is capital reserve, which is to be credited. So now let's see the accounting treatment entries. When PC, here PC stands for purchase consideration, I've used a short form here. When purchase consideration is equal to the net assets acquired, so the entry you have to pass, sundry assets account debited to sundry liabilities account to vendors account. This entry has to pass when your purchase consideration is equal to the net assets. Again I am repeating, net assets is nothing but the difference between value of assets and value of liabilities. So if it is equal, PC, purchase consideration is equal to the net assets, what entry you have to pass? Sundry assets account debited to sundry liabilities account to vendors account. Now another case, as we have seen, as purchase consideration can be equal, it can be less, or it can be more than net assets. So if your purchase consideration is more oblique less than net assets acquired, so what entry you have to pass? So I have shown in one entry both the conditions. Sundry assets account will be debited to sundry liabilities and vendors account. This will be as it is. This entry we have seen here, assets account debited to sundry liabilities account to vendors account. This will be repeated here. Okay, but the only difference you can see here, goodwill account and capital reserve account. So goodwill account you have to open when your purchase consideration is greater than your net assets value. All right, if your purchase consideration is less than the net assets values, or alternatively you can say your net assets value is greater than purchase consideration, then you have to open a capital reserve account in the credit side to capital reserve account. Cases can be of two situation, can be asked for two situations, like either it may be the purchase consideration may be more, or it may be less. But for the convenience, I have shown the entire entry, both the cases in one entry, so please do not get confused. The entry you have to pass, say for to make it more easy, let's understand in this way. When your purchase consideration is more than assets acquired, the entry you have to pass as sundry assets account debited, goodwill account debited to sundry liabilities to vendors account, till here. Now another case, when your purchase consideration is less than net assets acquired, the entry you have to pass, sundry assets account debited to sundry liabilities account to vendors account to capital reserve account. So this is the accounting treatment about regarding your purchase consideration. We will be seeing few numerical to get this concept more clear.